economics. And while in theory the idea sounds great, if it actually worked, we wouldn't be where we are today financially as a nation. As we've been at historical lows with our interest rates for years now, and the interest rate won't stay at historical lows forever, especially when factoring in our huge currency problem with our dollar and the fact that other countries are fighting to have the dollar removed as the reserve currency of the world. When the dollar is dropped from the world reserve status, the wealth of the United States, the wealth which the United States has enjoyed the past 65 years since World War II, will be gone, and interest rates will rise as the central banks raise those interest rates to capitalize on the production of other countries that are producing and expanding and creating jobs. What happens if interest rates rise to market value after elections and could go as high as 20% like they did in the 1980s? It'd be pretty scary. We need to invest in our people, our children, and in education. We have failed to properly educate every one of our children, especially when it comes to financial education. I hear the argument to spend more on education so that we can educate our children to get us out of the mess that we created for them. The problem is we are spending and not educating. We don't need spending on education. We're spending plenty and kids are not getting educated. We need more on-the-job training. Unfortunately, we have too many kids going to college on government grants that are bidding up the price of a college education sky high. We have all these kids graduating with huge debts from student loans, car loans, mortgages, credit cards, and no marketable skills for the economy. The artificial low rates our economy has are part of the problem, because we are pursuing those rates to prop up insolvent banks to necessitate the debt bubble and the government borrowing from the Federal Reserve. When interest rates ultimately rise, all the banks that the government's bailed out will fail again because they are insolvent. They are only kept afloat by the cheap money from the Federal Reserve. Their portfolios are loaded up with low-yielding, long-term mortgages and government bonds. And when interest rates go up, the value of those assets or loans that they have in their portfolios will collapse. But the interest rates have to go up because eventually the dollar will drop so low and prices will rise so much that nobody will lend us money. The dollar won't be the reserve currency. Right now this is being held off and we are actually benefiting from the fact that there are other financial problems around the world and we have elections coming in 2012. Look at the price of gold. Again, it's at $1,800, $1,900 an ounce. For a reason. It's going up because of all the inflation that we are creating now and all of the inflation that we're going to have to create to keep interest rates at the low levels they're at. What happens when interest rate goes to 20%? I'm asking again. And the national debt is at $20 trillion this time. People used to say in 2004, 2005, prices for real estate will never fall. It was a bubble. And now people are saying the same thing about interest rates. It's a debt bubble. People say we don't have to worry because interest rates will never rise. They will stay low forever. They won't. We're destroying the value of our money with these low interest rates and deficit spending. And at some point, our lenders are going to say, you're paying us back with money that isn't worth as much as it was when I lent it to you. Prices are rising because we are destroying the value of our money. Oil prices aren't going up. Ron Paul pointed out in the most recent debate, you can buy a gallon of gasoline for a dime as long as you have a dime that was minted before 1965. The reason is because we debased our currency and took the silver out of our coins shortly after there. This is because our money, the dollar, is being debased by the Federal Reserve. Prices aren't going anywhere. The value of our dollar, our money, is declining. And it's going to lose a lot more value as we continue to borrow and spend. Today, and this is what I want to leave you with, if you can produce a better product for less money, which also includes less labor, you can become a world-class creator of jobs. Stimulus, which simply adds jobs by paying for them, does the exact opposite of less labor, but world-class efficient labor that produces a product for the entire class. Henry Ford was famous for paying his high wages to workers. He paid them $5 per day, which was the highest in the time. That's an ounce and a quarter per day of gold, or at today's exchange rate, $2,500 per week, or over $10,000 per month. They were paying no federal income taxes, and back then, there was no payroll taxes. There was no minimum wage and there were no unions. We paid the highest wages in the world, yet we produced the best quality, least expensive products. How was that possible? It's possible because we had the smallest government. We had minimal regulations and low taxes. If we want to recreate American industry, we have to recreate that environment. We have to allow businesses to grow and to prosper, and we have to remove all of the roadblocks that Congress has put in their way over the years. I want to credit a lot of this information to Peter Schiff, Ron Paul, and other Americans that are staring the adversity that this country is looking at in the face, as our politicians are not doing their job, and they're simply, like I said, pouring gasoline on a fire and expecting that